Listen, if any of you are like I was, one unexpected bill could absolutely nuke your bank account. Congratulations, you're financially normal. You're not healthy, you're just normal. Let me guess, you work all the time, but you never really feel like you're ahead. You make money, but somehow it seems to find its way and disappear, like a magician's trick, right? You're stuck in debt, even though you're doing all the right things. If that's you, just relax. You're not bad with money. I know this because I was really bad with money, like professionally bad with money. It feels like one mistake, like the unexpected car repair, that one medical bill, just one mistake, that throws it all over, right? Over 70% of startups, they fail. And no, it's not because the founders were lazy or they didn't know their business. It's because the debt they took on, it strangled their cash flow like a financial anaconda. So here's the part no one tells you about. You don't need to make more money. I know it probably would help, but you don't need to make more money. You don't need to hustle harder or longer. And you definitely don't need another guru telling you and yelling at you that you need a different system and you got to pay them X. You see, back in 2005, I had a car, I had a business, I had a bunch of real estate, but from the outside, it looked like I was crushing it. From the inside, I was crying in the back of my retail shops. I literally was broke. But from the surface, I looked like I was crushing it. I was actually buried in debt. The bills were due. All the cash seemed to always be gone. So I had to do something. What did I do? I took a job as a financial advisor. I went to Wall Street, basically. Not because I wanted to, but because I had no other choice. I needed money. I needed cash flow. I needed a job. And I didn't know how to create it without more debt. Here's the part that still hits me today. If I had known what I'm about to show you, I probably never would have become a financial advisor, for good, bad, or indifferent. I could have stayed in my business, the retail stores. I could have kept building what I had started at the age of 16 years old, and I wouldn't have had spent 16 years away from my business in the Wall Street world. And Wall Street wasn't freedom. It was very nice. It was a nice looking cage, if you will, great suits, nice lunches, but the same problems. I just dressed better. So let me be frank with you. Here's what I learned while I was a financial advisor, while I was in Wall Street, if you will. Wall Street doesn't want your money to be flexible. They definitely don't want you to be in control of it. They want it locked up. Because when your money's trapped, it works for them. Or worked for me. And when you finally get it back, and most of you definitely would get it back, it's usually smaller than what you expected. It's not that big amount you saw in the beginning. And later than you probably needed it, right? High interest savings accounts, well, they sound safe, right? Until you realize the moment you pull the money out, the interest stops. So you really aren't able to have your money working for you. 401ks, you need the money now? Penalties, taxes, growth gone. So you're basically punished for using your own money. So if you're sitting there thinking, okay, I'm saving, I'm investing, but I'm still stuck, you're not wrong. You're just missing one piece. So what if your money could earn interest and anytime you needed money, you could just borrow against it? This isn't unfamiliar to many of you. Without the money ever leaving your account, in other words, your money never leaves the account, it's earning interest and dividends, and you get to use that money. That means that you never stop the compounding cycle. The question that I'm asking you changes everything, meaning you never stop compounding. You're literally tapping into uninterrupted compounding interest. That question alone changes everything. And if I had done this back in 2005, I wouldn't have needed the Wall Street paycheck. I wouldn't have been sacrificing my income just to keep the doors open. I would have used my own banking system to fund my businesses. I would have paid off all the debts. Debt certainly wouldn't have forced my hand. And I hate to say it, but it kind of did. Because looking back, I made 3 big mistakes. Number 1, I traded my time for money. That was my biggest mistake I made. That's why I went to Wall Street. That's why I became an advisor. I needed more income because my system that I had up to that point wasn't producing cash flow. Number 2, parking money where the growth stops when I used it. I was putting money in 401ks, high interest savings. I didn't have CDs, but I knew a lot of people that did. They grow until life happens, and life always happens. And number 3, following the only financial map I was ever given. Not because it was the best, but because it was common and it was the one thing I was taught. This is why people feel stuck. You earn, you save, you invest, then something breaks and your system collapses. Same stress, same fear, just a new year. Now hold on, let's pause really fast. You see, this channel just crossed 100,000 subscribers, which is wild. And thank you for that. If this is making sense so far, what I'd love to ask you to do is hit that little button right there. It's a subscribe button. You see, it tells the algorithm that this actually matters. And also, while you're at it, there's a little bell up top. What I need you to do is smash. Pretty cool. Smash that bell, and you'll be notified every time I put out new content or we go live. And we go live every single week. You don't want to miss those. They are wild. Let's get back into it. So every single thing that we've talked about thus far comes down to one word: control. Are you in control of your money? Not how much money you make, but how much money you control. See, that's the most important thing, because when you lose control of your money, your time is next. And your time is the most valuable thing you have. You see, the wealthiest families in the world all understand one thing. They understand compound interest. I know it's boring. It's certainly not flashy, but it is the engine behind long-term wealth. It's not a matter of whether or not you become wealthy. It's how do you keep the wealth that you earn. See, the problem isn't earning compounding interest. I think everybody understands how to earn compound interest. The problem is that most people interrupt the compounding interest every time they actually need money for something or an emergency comes up. You see, this is where most people lose the game. It's not because they don't save. It's not because they don't invest. It's because every time life happens, the system breaks. The plan you had fails. And when the system breaks, fear makes the decisions for you. So let me take you back to 2005. I was drowning in debt. My bills were all due. The cash was gone. And I thought my only option was to trade my time for a paycheck as an advisor. That was all I knew. But if I had known this strategy back then, I wouldn't have needed Wall Street. I could have just stayed in my business, doing the skateboard, snowboard shops, expanding them, funding growth, and I could have taken market share. I could have funded my own operations myself. I could have paid down the debt without killing my cash flow, and I would not have spent 16 years away from my business that I built with my own hands. You see, the problem wasn't my work ethic. I worked like a crazy fool. The problem was where my money lived and where I sent my money. I didn't need more income. I guess it would have helped. I needed a better system. See, this is where the idea of becoming your own bank comes in. Not as a buzzword, like some use it, but as a framework, a way for you and me as well to keep our money working while we're still able to use it. This isn't about getting rich quick. Definitely not that. This is about breaking the cycle that keeps you stuck. So one expense doesn't wreck your whole life, so that your business doesn't collapse the moment cash flow tightens. And it does. Businesses work in cycles. So your money finally gets to work for you and not the bank or Wall Street. I want to show you how I think my life could have went different had I known this back then. Come on. So let me give you a little bit more context on this period of time in my life. And I kind of remember it like it was yesterday, and that's not in a good way. So I had opened my third retail shop. It was in Orchard Park, New York. It was this really amazing boutique skateboard, snowboard shop, heavy focus on designer brands like skateboard, snowboard designer clothes that you'd only find in New York City or London. So we had this shop open, things were going great. And then all of a sudden, two things happened simultaneously, those life curves that get thrown in your way that you can't control at all. Number one, the dot-com recession started melting down. The market started collapsing, which really didn't bother me too much because I had very little money in some mutual funds with this guy, Dan, who I invested some money with. It was a very small amount. But what really started happening and that I started seeing is my business in my store started slowing tremendously as the recession got deeper and deeper. And just so you all know, if you're too young to remember, the dot-com recession was in the early 2000s, and it was a prolonged 3-year, pretty severe meltdown of the tech space. And as that happened, my customers, more so than me, started feeling the pinch. Lots of them got laid off. A lot of the people that normally were regular customers of my shops, not just this new boutique, but the shops, they were all, well, they didn't have money, so they couldn't buy new snowboards, couldn't buy new stuff. They weren't buying all the stuff they were. My sales were down like 30%. But to add to that, I had all sorts of debt. Because when we opened that store, we did it with leverage. I mean, hey, things were good. Business was great. We're opening a new location. We were highly leveraged. I leveraged all of our business equipment. From the credit card machines, I put those on leases, to the computers that we had, those were all financed, to all the inventory, the racking systems, the lighting, all of it, lines of credit. So even though the store was doing well, when it fell 30%, we were barely hanging on. And I remember I tried renegotiating everything, just like any of you would. If you owned a business and things got tight, you start renegotiating things. You start calling your vendors. You start calling the merchant services who you leased the equipment at a ridiculous rate. And you learned this, that you got screwed by the merchant service company, which I did. But then the final blow came in the form of a street, a road. The road that my business was on in Orchard Park. It was called North Buffalo Road. They decided that right during the start of this recession that they were going to rip the entire road up. They were going to widen it, put in all new sewers, new water lines, the whole kit and caboodle, which is great now. It's a beautiful street today. But imagine you're struggling as a business owner. You got this brand new location, heavily in debt, highly leveraged. And then all of a sudden, the recession hits you. So your customers start really spending a lot less. About 30% we were down. And then all of a sudden, they ripped the road up to the point where there were days where customers couldn't even get to us. And then we complained to the town, and there was nothing. I mean, nothing you can do about that. That was the final straw. So let me just kind of unpack this a little bit. I had my business, okay? Here's my business. And at that time, I had a couple rentals. So in the early 2000s, we had a couple rentals that we did. Now, I'm not going to elaborate on that. It was nothing like what we did. But we had business equipment, and we had debt for that business equipment. Okay? We had our cash flow for our business, but the cash flow wasn't sufficient to do what we needed to grow. You see, during a recession or any slowdown, in the economy, it's a really big opportunity for a business. That big opportunity is a business has the ability to go out and get market share, to take market share from the competitors if and only if the business is in a place where it's ready to take that. So let me preface, this is back in the 2000s during the dot-com crash when all this is happening. I didn't have the cash flow to spend any money on marketing. So one of the first things that we cut was marketing. And as soon as we cut marketing, we saw our sales slip even further. We saw our debts get behind even more. Because listen, cash flow is everything in a business. If your cash flow is significantly down, well, then all of a sudden you can't make your debt payments on your equipment. Okay, your rentals, well, those didn't really help us at all at that time because I had a business partner who definitely had a couple rentals, and we weren't marketing at all. And everything just started piling up. I was working literally 10 a.m. in the morning until 9 o'clock at night. The only day I got a relief was Sunday. The store was open from 12 to 6. I had to cut my staff back. I started taking on double shifts, and I was working myself to the ground. Now, personally, I had a truck, and I remember it was my first real thing that I got for myself. It was a ZR2, and I know some of you are going to laugh, but it was a ZR2 S10. And it was awesome. It had big suspension. I went off-roading in the thing. Anyway, my truck, and this is going to make you guys even laugh even more, but you'd have to go back, was $199 a month. I was living in a room in my buddy's house. It was kind of a skateboard, snowboard house. It was super fun, but I barely could make rent. And I think my rent was probably $200-300 a month. My car payment was $199. I had a Visa credit card that maybe a couple $100. I couldn't make my bills. I couldn't even take a paycheck. So now that you understand the circumstance, don't think that can't happen to every business owner because things seemed so good right before that. So how could I have taken what I know today and how could I have applied that back then? Well, you see, when I was running my businesses in the good time, when I had extra money for my business, you know what I did with it? I put it in the bank. And then for some reason, when I put it in the bank, the money just sort of vanished because I bought more goods and services for the business. I bought more inventory for the business. We expanded things. We spent money on marketing. And I was putting some money away from myself, just like I was taught, into an IRA. I had an IRA account at a mutual fund company as well as a non-qualified account that I put money into. So all that money disappeared because First off, the non-qualified money, when things got rough, that's where I took money from to pay the bills. And then all of a sudden, the IRA, which I don't know, probably didn't have a ton in it at that point because I didn't start it that long ago, I had to deplete that, pay penalties and interest on that money. See, had I known back then, I would have redirected the money into my own private banking system, especially designed and engineered whole life. Now, I can't remember this or not, but I did have a whole life, but I think I started that after this. But anyway, nonetheless, I could have put that money into my own private banking system, and I could have started building that up. On a monthly basis, I could have taken some of the money from the business, and I could have put it into this policy. It wouldn't have mattered if it was $200, $300, $400, $500 a month, not a significant amount of money, but a real significant amount of money when you have none, okay? So had I done that, let's just say I had built up $25,000 in that private banking system. When things got rough in my business, what I could have done is I could have taken a loan from my policy. Okay, segregated account is just for books and records. It's just the second bank account. Ran it through the segregated account. I could have done a note to my business. And it could have been a deferred interest, right? So I did have loans for the business, but they were through banks. And banks don't allow you to defer payments. But when you're your own bank, you make the rules. It's your banking system, it's your money and your rules. So let's just say I had a note, a loan from me to my business, okay, for let's just call this $25,000, and let's say I had 6% interest in a monthly payment, I don't know, let's call it 6%, 25 grand, probably $600 a month. Let's just say that that was my note. I'm just making this up. When my business started having trouble with all these different things, number one, I could have deferred this, so I could have went in a deferral state. So that would have helped my business because all those debts that I had to pay to other vendors and other banks at that time, I could have controlled that. But here's the biggest thing I could have done. Forget about this note in the deferral, but that's what I could have done. I could have taken this 25 grand and I could have used that to pay off all that debt. I could have used the cash flow from the business to then repay my policy. So it would have been all the same dollars, even though they were reduced by 30%, because I couldn't have done anything about the road construction or about the recession. But I could have done something about where my cash flow went. See, during the hard times, my cash flow serviced debt, which made it so I couldn't do the marketing, which the marketing is what I needed to be spending money on, but I couldn't because I was buried in debt. But you see, if I had my own banking system, I used the money from my banking system to pay off the debt, took the monthly payments that I was making on that business equipment and everything that I borrowed money for that new location, and redirected that cash flow back to myself. I could have used another loan, or I could have used some of that cash flow for marketing because I would have been in control of the debt payments. Knowing that we were in a recession, knowing that the road was all ripped up, both temporary situations, although the recession was prolonged, 3 years, but the road construction was about a summer, I could have waited that out. I could have bought myself time in my business, but you see, I didn't have a private banking system. I didn't redirect cash flow during that time. I just kept spending and spending and spending because I didn't have a system. I had the system I was provided through life, the system that most people are taught. And because of that, well, things got rough. I ended up having to become a financial advisor. I put a resume out, and that's the only company that called me back. Little Caesars wasn't hiring pizza delivery guys. That's a true story. And not only that, the worst part was, one day, myself and my business partner, Steve, backed a U-Haul up because we had a lease. We had to lease it for that location, and he wouldn't let us out of the lease. He wasn't being super forgiving or even understanding about our circumstance. We backed a U-Haul up. In one night, because it was during the night, we had to do this secretively. Myself and a couple of my friends and Steve loaded that U-Haul. Everything out of that business was loaded into a U-Haul. And I remember standing at that door, looking into this hollow space, which once was this new boutique store, all the beautiful paintings on the wall, and I had to say goodbye. And that resulted in a lawsuit from the landlord, which we ended up having to pay over the next couple of years. You see, all of that could have changed. But even though I went into being an advisor, I did very well, made great money. All the money in those early years of being an advisor paid off all the debt that I incurred from this failed business location. That lease that we broke. Myself and my partner, we had to over the next couple of years because we went to court and he was granted some of the rent. Although the judge was pretty good to us because of the recession, we still had to make payments back to him. So What I'm trying to say is life will throw you curves. Life will throw you things that will sidetrack you. And when you're not ready for it, like I wasn't, it will devastate you. I'm not saying that this would have saved all of it, but I'm saying this would have given me a real fighting chance, and that's what I needed back then. Now today, I think there's something like the dot-com crash happening. But here's the difference. I am ready today. I've got my own banking system. I've been getting ready for this moment because when it happens again, when we go into an economic slowdown, when we go into a recession, you know what I'm going to be able to do? And I'm not bragging, folks. I'm going to be able to spend money to take market share. I'm going to be able to go to other competitors and buy them out. Pennies on the dollar. Because they will be where I was back then. But you see, I've learned. I've course corrected. I've found a system, the proper system that puts me in control of my money. The same system I need you to learn before it's too late, before you have to ride the roller coaster that I did. And you know what? When we go through this next cycle, when all this happens, I'll still be in front of this camera telling the same story, but the story won't be of having to get another job and having to close my location and stand there at the door saying goodbye to what was a dream, that boutique. I'll be standing at another door saying, guys, we just acquired this business, pennies on the dollar. Let's merge this into operations. I bought this using my private banking system, so let's make this work. See, two different stories, two different outcomes, one change. And that is where your money goes first and the system you follow. So don't make the same mistake that I made. Because it doesn't just cost your business, it doesn't just cost you money. It costs your time and sometimes your dream. So listen, if you liked this video, I know it's a little bit of a dark story. I want you to take the next step to learning how to become your own bank. So I created this video right here, The Secrets of the Wealth. This is what I should have watched back then, and that's the video you need to watch. So check it out, and you know what? I'll see you on the next video.